Oh, dinner for one. Okay, shall we start? Okay then, good evening everybody. I'm Sam, I'm Programme Manager here at Premier Training. This evening I've decided to do a webinar on the Profit and Loss and Statement of Financial Position. It is quite a common area in the exams, and obviously in the real world it really is an important area to understand. So I was asked to do this by one of our students, so I'm hoping that you will get some good information tonight. If you have got any questions, we have got Peter, who's one of our fantastic tutors here at Premier Training. He's on hand in case I miss any questions from the chat box. But if you have got any questions, please type it into the chat box and Peter will answer you if I miss it. And then any questions that get unanswered, I will make sure they are all answered for you. If Peter doesn't mind entering in my email address as well, so if you've got any questions after this evening's event, you know, I will be available on email and I will get back to you as quick as possible when I return to work tomorrow. Okay then, so let's get started. Okay then, so your financial statements. Your financial statements are important for all businesses. So this is where we get as information from on basically how the business is performing. And you know, it's important to make sure as accountants, as bookkeepers, that this information is accurate. Okay, so the first financial statement we're just going to talk about and look at is the trial balance. So this is your starting point. Okay, so everything that you're doing in your level 2 studies, this is where it's taking you to. Is your trial balance correct? Is there any errors in your trial balance? Now, I will do a webinar on errors in the trial balance and the correction of errors another evening, but this evening I just want to concentrate on the financial statements. Then you've got your statement of profit or loss. Now this, Angela, are you okay with sound? She says it's echoing. Let's see how we get on and just keep me informed if there's any issues. So the statement of profit and loss is the statement that tells a business how we're making the money, how we're making a profit. Remember, profit is not cash, okay? So we always say cash is king. Profit is the amount that the business will have to work out to see whether they've got any corporation tax or self-employed tax, partnership tax to pay. Okay, and then we're going to move on to the statement of financial position. So this is an important statement really, because this tells the company what position they're actually in. So when we talk about the financial position of a business, this looks at the liquidity. Can they actually pay for their liabilities, or is their liabilities higher than their assets? If it is, then we've obviously got a problem which we need to identify. Okay, so I've been teaching AAT for 15 years. Okay, so I've been AAT qualified for well over 20 years and had my own accounting practice, which will have been trading 15 years this year. Now, we use a couple of acronyms to help us with bookkeeping and accounting, because it is quite a unique technique. And I suppose when you first see it, you just think, I'm never ever going to understand this. But what we do is we make up acronyms. I've made up many stories to remember certain things, especially at level 4. So the first acronym that we ask people to look at and to try and remember is PEARLS. Okay, so remember, you drive on the left, you crash on the right. So your debit is always on the left, your credit is always on the right. So to work out your PEARLS, what you have to do is remember what the letters stand for. So your P is for your purchase, your purchasers. Now remember, these are the purchases that you are buying to resell. Okay, so these are items of stock that you're bringing in, so you're going to resell it. The next one is expenses. Now this is everyday business expenses. So every expense you can think of, rent, rates, light, heat, wages, telephone, are all expenses, everyday revenue expenditure. So they are your debits. A is for assets, so these are your non-current assets and current assets. Okay, so your non-current assets are items that the business owns that will last longer than a year, so we're going to depreciate them over their useful economic life. So your credit side, you've got R is for your revenues. Now this is any type of revenue, so these are things like your discounts received, your interest received, so anything that really is not trading, it comes from other avenues. Then you've got your liabilities, so this is monies that we owe out to people. So it could be inland revenue, it could be your trade payables, it could be your accruals. We owe money to them, so they're your liabilities. And then your S is for sales. Okay. The alternative to pills is dead click, okay, which basically means we're going to debit our expenses, we're going to debit our assets, and we debit our drawings. Now remember, drawings are an expense to a business because the owner is taking money out of the business, or they could be taking goods out of the business. But when it comes to sole trader accounts, we have to add these back in for tax purposes. So this is just an accounting transaction, okay? When it comes to your credits then, we are going to credit the liability, we're going to credit income, and we're going to credit capital. So remember, capital is the money that we invest in our business. So it's really like a loan to the business. So we put it there to start up the business, to buy whatever items we need, inventory, stock and so on, and then the money will be paid back at some point as a capital repayment. Okay, so your trial balance. So I'm going to use pills for this example, okay, because that's the one that I've always used. That's one that I use for teaching, and you'll be able to see how it fits in, okay? So using your pills, sales, do we think it's a debit or a credit? I'll just give you a couple of seconds to type in bottom. Is it a debit or a credit? Okay, well done. So if you use pills, yeah, if we go back, yeah, pills is on the S is on the credit side, so it's got to be a credit entry. So your sales would be credited, okay? If your sales is a credit and the P is on the debit side, your purchases have got to be the debit entry, okay? Now this is a tricky one that people get stuck with, carriage inwards and carriage outwards. What do you think we would class carriage inwards and outwards as? I'll just give you a couple of seconds to type it in bottom. Brilliant. Yeah, they are both expenses. Okay, now it does try and confuse people because you've got your carriage inwards relates to your cost of sales. Okay, so that's what it's costing us to bring our purchases into our business. Your carriage outwards is what it costs us to send goods to our customers, but they are both expenses to the business, okay, because we are paying for them, so it is an expense to us as a business. Your capital then, so if you struggle with your capital on pills, capital is a liability, okay, but use your dead click. Your dead click tells you it's a credit entry. Your pills tells you it's a liability, which is a credit entry. So your capital is on the credit side of the trial balance. If your capital then is a credit, then your drawings has got to be a debit. And this is money that they've taken out of the business, so it's turned into an expense from the business. So if sales is a credit, what do we think sales returns would be? Brilliant. Okay, sales returns would be a debit. Okay, so you can see how using your pearls makes it quite simple. It takes the thinking out of it. Purchase returns then. Purchases as a debit, so purchase returns has got to be perfect a credit. Oh, you're all on the ball tonight. Okay then, so an irrecoverable debt. An irrecoverable debt means that our customer cannot pay us. Okay, so we've sent out the sale, okay, and they owe us the money. They cannot pay it. So what's going to happen to this? What does it turn into? Perfect. Well done, everybody. It turns into a debit entry because it is classed as an expense. Fantastic. Okay, then your motor vehicle. The company owns the motor vehicle. Okay, it's going to last longer than a year. So what are we going to class it as? Excellent. It's an asset, which means it's going to be a debit entry. So the cost of the motor vehicle is always a debit entry until we sell it, which again we can look at that on another evening. The accumulated depreciation then is the amount that we are writing down the motor vehicle by. So this, we're writing it off over a period of time. So the accumulated depreciation is what we're going to bring the asset value down to. It's what we call the carrying amount or net realisable value. So if the motor vehicle is a cost and it's a debit entry because it's an asset, what are we going to do with accumulated depreciation? Brilliant. Absolutely fantastic. Well done, everybody. We're going to credit it. So when it comes to posting it to the financial statements, we'll see a true value. We'll see a true carrying amount or net realisable value, net book value. So office equipment then. Office equipment's an asset, which is a debit. Accumulated depreciation is a credit because it's going to reduce the amount of the asset. So wages, light and heat. So these are everyday revenue expenditure. Okay, so which side would your wages and light and heat go on? Brilliant. Okay, so you can see using your pearls, it makes it quite easy to understand. What about then if we owe money to HMRC? What is it classed as and what side does it go on? Fantastic. What a team. Okay, so yeah, it's a liability. We owe the money, so it's going to be credited in the accounts until we've paid it. Now this one, please, in your exam, don't let them trip you up on this. It does say bank debit balance, okay? Now look at it from our point of view, not the bank account point of view. And if it states debit balance, it is a debit balance, okay? So I do know that it has thrown quite a few students in past because you've put it on the opposite side because you've thought of it from a bank's point of view. For this exam, for level 2 exam, please make sure it's on the side that they actually say. Okay, now this one's where people do get confused, okay? Discounts allowed, discounts received. Discount allowed is where we are giving a customer a discount for paying us early. Okay, so if somebody owes us £100 and I say to somebody, right, if you pay me now, you only have to pay me 80, I'm losing £20. Okay, so if I'm losing £20, it becomes an expense to me because I haven't got that money and I need to somehow claim that money back. So a discount allowed means that you are giving somebody a discount, so it turns it into an expense, which would be a debit entry. Okay. Yeah, there's different ways of remembering it, but I always look at it from if I'm allowing somebody to get away without paying me the £20, then I'm going to that becomes an expense to me. So I look at it from my point of view as a business. So discount received, okay, means that they're giving you a discount. And if they're giving you a discount, you're receiving it, which becomes additional income. Okay, it becomes additional revenue. So your pearls will tell you that your R for revenue is a credit entry. So you're receiving something which will be a credit entry in the accounts. Okay. Depreciation charge then, or provision for depreciation as it is seen at level 3. Okay, your depreciation, yeah, we've got accumulated depreciation, that is a credit entry, but the depreciation charge for the year, so this is the amount that we are writing off during a year, is an expense to the business because we are writing it off over a period of time and not all at once. We've got to ensure that that expense is written off against profit. Okay, so depreciation charge, yes, you are right, it is an expense and it is a debit entry. Okay, because you are writing off the value of that asset, and the only way to write it off is by putting it through the P&L as an expense. Okay, petty cash, okay, cash account, it will always be a debit entry. You can never ever have minus £10 in your purse, okay, or your wallet. So you can have nothing or you can have cash, okay. So if you've got cash, it's an asset, which is a debit. If you haven't got cash, you've got nothing, so it can't be a credit because it can never go into minus figures. Okay, inventory, or the old terminology stock, but we do use inventory. Inventory is an asset that we've got available ready to resell. Okay, however, you have to remember with this, it's got a value to the business, and that's why we class it as an asset, because the once we've sold them, we're going to turn it into cash. But at this moment in time, if I've got 20,000 Mars bars available, yeah, it's got a value to me. So the inventory would be classed as a, what do we think? Ahmed, yeah, you all right? Yeah. Anybody else? Brilliant. Yeah, it'll be a debit because it's an asset. Okay, it's a current asset, and it's a current asset because the value constantly changes. Okay, it never remains the same. So as soon as I've sold some of that, the values change, so it's a current asset. What about your sales ledger control account then? So this is customers that have bought from us, they've bought on credit, so they owe us the money. What are we thinking? Brilliant, yeah. Well done, everybody. It is a debit and it is a current asset. Again, it's a current asset because the value's constantly going to go up and down. When somebody's paid us, it's going to go down. When they've bought more, it's going to go up, etc. So if your sales ledger control account is a debit, then your purchase ledger control account has got to be a credit. It's a liability. We owe the money. Okay? What about your closing inventory then? What do we think that is? It's a bit of a tricky one, this one. I'm throwing it in. Brilliant. Okay, well done, Victoria. Yes, it goes in both. Okay, and I'll explain why it goes in both in a minute when we start looking at the financial statements. But it does go in both accounts. Now, at level 3, okay, I'll just point out the closing inventory figure, yeah, the 12,500, it's in both sides, but it could be on separate lines. And you could have one that says closing inventory, statement of profit and loss, closing inventory, statement of financial position. Okay, so in your statement of profit or loss, it will always be a credit entry. So this figure on the credit side relates to your profit and loss account. The debit entry relates to your statement of financial position because it's an asset. It's the stock that we've got left over at the end of a financial period. Okay, so credit is profit and loss, debit this statement of financial position, and I'll show you how it looks in a second. So at level 2 then, obviously you need to make sure that your trial balance balances. Now just a trick in your exam, okay? Can everybody see this red light? No. So I'm pointing this red light and nobody can see it anyway. Okay, so in your level 2 exam, the column that says amount, okay, to make sure you've done it right, what I would do, I would add all those up, I'd divide it by 2, and I'd put it in the debit and credit column. So that's what you're trying to get your trial balance to balance to, okay? So add up all your amount column, divide it by 2, and put that figure in your debit and credit column. So when it comes to doing the exam, yeah, and you're checking your trial balance, you'll know exactly what it is that you're trying to get to, and it just makes it easier. If it's not balancing, it makes it slightly quicker. Okay, so just a trick of trade, that one. Okay then, so now we're going to move on to preparing the statement of financial position. Okay, now you will see on this one we have got 3 columns. You can just have 2 columns. So in real world, when I'm doing my clients' accounts, I just use 2 columns, okay? However, in the majority of the AAT exams that I've seen, it is 3 columns, and I'm going to explain to you why you've got 3 columns, okay? So the inside column, the one nearest the sales return, so on, you need to look at it as debits and credits, okay? So the inside columns are going to be your debit. The outside column is basically your credit. So that's where you're going to put things to do with your sales and so on. So what we're going to do is we're going to go through this, and you'll see as I'm going to put a figure in, it's going to highlight on screen in blue. So you'll see where it's actually going. So your statement of profit and loss is laid out just as I've got it. You can have a lot more expenses in there, and there is things that I will be adding on later webinars, okay? So things like provision for doubtful debts and so on. Okay, so I've tried, but I want to just keep it simple tonight so you get a really good understanding of where once we've done the trial balance, how it works on statement of profit and loss. Okay then, so the first thing we're going to look at is it's always your sales information at the top. Okay, then it goes to your cost of sales, and then it goes down to your expenses. Okay, so the first thing we're going to put in is we're going to put a sales figure. So that's a starting point. The next thing we've got to think about is a sales return, so as credit notes, the ones that we've sent to our customers. So your credit note is then going to be entered in under sales, your sales heading. Now, in your exam, you may only have room to type in sales, okay? If you do, don't worry. Just take the credit notes off the sales and put in the net amount, okay? So if you can see that you've got sales returns, but there's only one box to fill in, you know they've taken off the credit notes. So please don't panic. It's not to throw you. There's a couple of ways that you can do it. So then we're going to go on to the total. So you've got your sales minus your sales returns. So remember the credit notes to give you what we'd call net sales. It doesn't have an heading, okay? In real world, you might put net sales, but for financial statements and for your exam, you don't need an heading. Then we've got the opening inventory, okay? So this is what we started with at the start of a financial period. So this is your opening stock, okay? So this is what I started with, and you can see on mine, it's gone into middle column, and I'll explain why in a second. The next thing that we're going to look at is purchases. Now, because I've got purchases and I've got purchase returns, my purchases figure is going to go into the inside column, and then my purchase returns is going to go underneath. And the reason why that is because I'm going to do a calculation, and the total of the purchases minus the purchase returns will go into the middle column. Okay, so anything really that's got a calculation, you show the calculation and then put the total into the middle column. Your returns, your carriage inwards, remember this is the carriage that we pay to get our goods sent to us, to get our purchases to us. So your carriage inwards is always shown within the cost of sales, okay? Now, these are really good tips because this is how you can get your distinction, all right? So if you can make sure that you put them within the correct headings, yeah, and the correct section of P&L, that's where your distinctions are going to come from in your high pass. So your carriage inwards is £1,092, okay? Then your closing inventory, so like I've spoke to you about before, your closing inventory is the one that is coming, we're taking it off, okay? So it's coming from your trial balance, and your closing inventory is, we're taking that off. So that is the amount that we've got left over, okay? So you've got, then we're going to total our cost of goods sold, or it could be called cost of sales, okay? So your cost of goods sold is your opening inventory plus your netted off purchases minus purchase returns, which is the 37480, plus the carriage inwards minus the closing inventory. And remember, you're taking that closing inventory off because that is what you've got left in stock, okay? Your gross profit figure then comes from your sales, your total sales minus your sales returns, so your 78939, minus your cost of goods sold. Do not add them together, okay? So for the sales you've made, it has cost us 37382 to make them, okay? So one minus the other gives you then your gross profit. Then we've got to add on any additional revenue, so anything that we've received. So it could be discounts received, advertising income received, but on this example we've only got discounts received. Now remember, you're adding that on, okay, because that's something you've got, it's additional income, we need to add it on, okay? So you've got then your gross profit plus your discounts received to give you your 42452. Now you have to be careful with your calculations, so don't just go constantly adding it up. What you've got to realise is that your gross profit is a total, so all you're doing is adding it back onto that total. You're not adding anything else above, okay? Then we've got all as expenses. So as expenses is your carriage outwards. We've got the irrecoverable debts, and you can see that everything's now going into the middle column because I haven't got to do any calculation. We've got wages, again, everyday expense, light and heat. We've got discounts allowed because this is an expense to us because we've given it to a customer. And then we've got the depreciation charge for the year, okay? Not the accumulated depreciation. So the depreciation charge is the one that goes against expense. And then to total up, we've got the total expenses, which is your 16730. And to get your profit for the year, you're taking your total expenses off your adjusted gross profit, your 42452, to give you a profit for the year of 25722. Now we're going to need this profit for the year figure, okay, and we're going to need that because if we don't have this figure when it comes to doing the statement of financial position, it won't work, okay, it won't balance. So please be careful when it comes to doing your profit and loss, because that figure is absolutely crucial for the next financial statement. Okay, so the which figure? Okay, because what we've done is with the 37480, Louise, is we've done a calculation because your purchases minus your purchase returns is a subtotal. So we're basically totaling them together, and it's the total that goes into the middle column. Okay, so it just shows that we've made an adjustment. Now, like I said earlier, yeah, With the sales figure, remember if there's only one box, take off your credit notes, your sales returns, and put in the 78939. Likewise with the purchases. If there's only one box in the exam, yeah, because it could be a 2-column statement of profit and loss. If it is, take off the purchase returns and it would be the 37480 that you would show. Okay, so don't let the examiners try and trip you up, because that's what they want to do. Otherwise, we'd have a world full of accountants. So please don't let them trip you up. Use your knowledge. You know where your figures are coming from. You know you've got to take them returns off, and then just use that net figure that you've calculated. Okay. Is everybody okay with the statement of profit and loss, or have you got any questions that you want to ask at this point? Okay, brilliant. Must be doing a good job. Okay then, so statement of financial position then. Okay, so your statement of financial position tells the company what position they're in. Okay, so we're going to work through it. Now it always works out. If you're on here and you're doing level 4, okay, now this won't work for level 4 because there is a different layout. So please don't think this carries on to level 4 when you do limited companies, because it doesn't, okay? But this is the layout that you've got to know for level 3, okay? So you've always got your non-current assets, your current assets, current liabilities, non-current liabilities, and your finance by section, okay? Your non-current assets, yeah, are items that will last longer than a year. So it brings into your accumulated depreciation. I've got 3 columns. So the inside column is the cost. The middle column is the accumulated depreciation. And the end column is what we call the carrying amount, or the net realizable value, or net book value. Okay. So the first thing we're going to do is we've got motor vehicles, which we are going to put into our statement of financial position of 18,000, and then we're going to enter in the accumulated depreciation. Now what you need to remember with this is you're working out the value of it. Well, we've written off £6,480 worth of depreciation already, so you're taking that off the 18,000 to gain a carrying amount of 11,520, okay, on net book value. That's fine. Then we've got as office equipment. So we've got office equipment of 12,500. We've got accumulated depreciation of 3,750. And then that gives us a total, or a net realizable value, net book value, carrying amount of 8,750. Now remember in your exams to always balance it off, okay? Total it up. This is where you will gain really, really high marks. Remember, as accountants, we need to make sure we're accurate. So you're then going to total up all your columns. Make sure you cross-cast, okay? So you take off so you've got your total cost column of 30,500. minus your total accumulated depreciation at 10,230, and then check that your 20,270 is correct. Okay, so please take your time with questions like this, because they're always quite highly marked questions. So your inventory, remember, your inventory is what we've got left over. So it's always your closing inventory. So the amount we'd got left over was £12,500 worth. Okay, so it's come into the inside column, and on other presentations I'll show you how to do it different if you've got things like provision for doubtful debts and so on. Then we've got a sales ledger control account, or also known as trade receivables. So this is somebody that owes us money. Yeah, so they're an asset to us. We don't want them to go into liquidation. We need them to pay, so they're an asset to us. Then we've got the bank account. Because we said it was a debit balance, it's an asset to us. If it was an overdraft, it would go under current liabilities. Okay, but because we've got money, it's an asset and it goes under the current asset section. Then your cash is always an asset. It can't go anywhere else. If we've got money in his pocket, it's always a good thing. Now, one thing I am gonna explain to you is the current assets are in an order, what I call order of liquidity. Okay. Now, to gain them distinction marks, order of liquidity is quite important because what it tells me is that the hardest to turn to cash, to physical cash, is at the top. Okay. Now, if you work in a business that sells, I don't know, metal rods, for instance, there's only going to be certain businesses that can buy that stock off you. So this stock is hard to turn to cash. Okay. Your trade receivables come in next because some might pay you, some might not pay you. They owe you the money, but it's not as easy for you to gain that money. Okay, you've got to chase it. So the second one on the list is trade receivables. Then you'll see that the bank comes next because that money is in the bank. So if you went to the bank and said, I want £3,091 out, that money is there and waiting. It just takes a bit of time to go to the bank and get it. The final one that is always at the bottom is cash because it's there, whether it be in your petty cash tin, in your purse, in your jacket pocket. That's the easiest to get to. The cash exists, it's physical and it's there. So order of liquidity is really important. Okay. The next then comes current liabilities. Oh, sorry, we total up your current assets. The total is put into the middle column and you'll see why in a second, because the next thing we're going to look at is current liabilities. Your current liabilities is your purchase ledger control account or your trade payable. So this is somebody we owe money to, and these are our suppliers. So the suppliers that we buy from on credit. Okay. So that's the first figure. Then it tells us that we owe some money to VAT-man. Okay, so we owe £3,105. So to total those two together gives us £20,491. I now need to work out my net assets. And a balance sheet's quite important for that, or should I say statement of financial position. Because if my current assets were higher than my current liabilities, it means that I have got enough money to pay my liabilities. If my liabilities were higher than my assets, I wouldn't be able to have the funds readily available to pay off my liabilities. So at level 4, when you start looking at things like this, you have to start interpreting the financial statements. And it's, you've got to have a good understanding of what the figures mean. So if I went and sold all my stock, got all my trade receivables to pay me, got all the money from my bank, got all the cash I got, I can still pay off my liabilities, which is a good position to be in. Okay, so your net current assets comes from your total current assets minus your total current liabilities. Okay. Then I've put in the heading non-current liabilities. Now these are items that you owe, but it's going to be paid for over a long period of time, so longer than a year. So your current liabilities are always within a year. Your non-current liabilities are over a year. So if you've got a 10-year bank loan, for instance, it would come under current liabilities. If you've got a commercial mortgage or buying premises, it will come under non-current liabilities. On this one, we haven't got any non-current liabilities, but I wanted to put it in to show you exactly where it would go if we did have any. Then your total net assets. So on this one, we've got total non-current assets of 20,270 plus the net current assets of 25,725. If I'd got any current liabilities, I would deduct the non-current liabilities, but I haven't got any. So I'm just adding those two figures together, which will give me total net assets of 45,995. Okay, so that's your top half of your statement of financial position. It were easier when they called it a balance sheet because you're balancing from top half to the bottom half. But now let's go on to the finance by section. So the capital is money that we've invested in our business. Okay, so the owner of the business has put in. And they've put in, and it goes straight into the end column because it's just a straightforward calculation. and they've put in £22,823. The next figure is your profit and loss figure, so your profit for the year from your statement of profit or loss. And this figure, if you can remember, totaled 25,722. So that's the money that we've made. Because we've made a profit, we're going to add it on to our capital. If we made a loss, we deduct it. Okay? But we've got some drawings to go in here. So, you know, the owner of the business has taken, whether it be stock out for own use or whether it be cash, whatever. They've had £2,550 worth of drawings. We're going to deduct that. So remember, capital plus the profit for the year less the drawings should come to 45995. And if you've got your balance sheet right, those two figures will match each other. Okay? And that is when you know you've created a statement of financial position and a statement of profit and loss, and it's correct. Okay? Because both figures balance. Has anybody got any questions on that? If they don't balance, it could be for a reason such as you might have missed something out, okay? Or what you could have done is you might have missed something on the profit and loss and thought it goes in the statement of financial position, or vice versa. So things like irrecoverable debt, for instance. Some people might get confused with provision for doubtful debt and think it has to go onto the statement of financial position. Now, the good thing with this is you know it has always got to balance, okay? So you know if your statement of financial position does not balance, there's been an error. So it gives you time then to either look back at the statement of profit and loss, or if they're just asking you in an exam to do a statement of financial position, it gives you the opportunity to work out how much is missing. So what I would do is I would take the difference. So if my total net assets figure's correct, for instance, but my finance by section's not, find out the difference. And it could be just a slight, you might have done a transposition error, for instance. So there's always a reason why it won't balance. But if you've done it, you've took your time, it wouldn't take you long to go back over it. Okay, so that's the end of this webinar. Like I said, there's a lot of things that I want to be able to do with webinars, but I don't want to put too much in all at once. I would rather have a lot of short, although I'm saying short, it's been 45 minutes. So I would rather have a lot of webinars where you're getting, you know, a lot of information, but not too much where you're going to forget it. So I have a question about opening inventory. So your opening inventory, yes, it is only on in the cost of sales section. It's the top one, and it is only on the P&L. It's the closing inventory. So when you do extended trial balance, for instance, at level 3 on advanced bookkeeping, you will have 2 entries, okay? And the 2 entries will, one goes in the profit and loss because you're taking it off, and one goes in your statement of financial position because it's an asset. It's a current asset, and it's the stock you've got left over. Okay, so if anybody's got any questions whatsoever, you can pick my brains for a little bit longer if I've got any left. But please ask away. That's what these evenings are about. Anything at all, we are here to help you. Yes, what we'll do, Joanne, is we will send you the link, so you've got me forever if you want me. And then you can keep playing it back. That's not a problem. Oh, thanks, Joanne. That's lovely. Thank you so much. Oh, both Joanne's. Don't worry, Sheila. Yeah, I promise you, you can hear my dulcet tones as many times as you want when we send it. Yeah. Oh, thanks, Victoria. That's lovely. Yeah, Louise, we're going to be doing a lot more. So yeah, they are really good. Yes. When you get to level 4, when you talk about capital, it becomes what we call equity because you're looking at your shareholders' funds. Okay. Drawings then become dividends, or you can have remuneration, directors' remuneration. So yeah, it does change at limited companies, and that's why I had to make sure that there weren't any level 4 people in here because this is not how it looks at level 4. Oh, brilliant. That's great, Tricia. I'm glad you've enjoyed it. Yeah, Tracy, it's good for you to refresh. Yeah. Could I just say to you all while you're here, if you have got any webinar that you would like us to run, you've got my email address. Please drop me a line. Takes a while to write the presentation to make sure we get it up to where we want it to be. But anything that you want me to cover, I know I've had a request for bank reconciliation at level 2. I'm going to be doing one on suspense account, correction of journals. Please let me know. And we'll be more than happy to put some more on. We are going to be aiming at different levels, but we'd like to think that we'll be doing at least one a week. So anything specific for you that you think will help you and other people, give me a shout and I will do my best for you. Oh, that's lovely. Thanks, Charlotte. What we'll do, Joanne, is we obviously do send it out through Premier Training to all our students. And then what I also do then is if there's any spaces, we will process it on our accounting student network group. So hopefully you'll not miss any. You'll get the information from somewhere. Louise, if you ever get stuck, you know where we are. We've got plenty of resources, so just give us a shout. Is there a certain Tricia, like I said, with this, we've got quite a few webinars that we've got planned. We're constantly working on our resources, so anything else we will get it advertised on Premier Training Facebook page. We send it out on email. I send it out through ASN group. So I do try and get it out there as much as possible. Maybe what we'll try and do is if I can speak to our IT team, if we get some kind of I don't know whether we can do like an email, an email out. We'll be able to do that, won't we? So yeah, we will keep everybody informed, and then if you want to sign up to receive emails on webinars, we'll send you something out, and we will. You're guaranteed not to miss us, then, aren't you? So, has anybody else got any questions whatsoever? Just a couple of people typing. When's the next one? We're looking at doing them every week, Tracy. So what we'll do is, because you are with Premier Training anyway, we'll make sure that you will get a schedule with all the webinars on. We'll definitely book you in. Yes, Lucille, we're doing webinars and everything and anything. So we are trying to get. We're going to have tutors that specialise in certain areas. So we will, if you're wanting one for financial statements, then by all means, I can get one of my fantastic tutors to do one on financial statements. That's not a problem. We've got quite a big team of tutors here that have got a lot of experience. So I'm sure one of them will be eager to do it. If not, it might be me again. So if there's no more questions, it's been an absolute pleasure to have you all in the room tonight, and we will get this sent out for you tomorrow. But thank you all so much for Elco. Yeah, I love Elco. Do you want to do something on stock valuation? Yeah, LIFO, AVCO, FIFO. Yeah, that's fine. Whatever you need. Yeah, thanks, Tracy. But like I say, you've all got my email address. Please keep in touch. If you have enjoyed it, if you could review us on Facebook, Trustpilot, I would be absolutely over the moon. And then, like I said, please keep me informed on what you want, and I will be in touch with the next webinar, and hopefully there will be another one next week. So good evening, everybody. Go and enjoy your tea. Louise, I hope you've not burnt it. And I will speak to you all